Welcome to Turning Hard Times into Good Times. I am Jay Taylor, and I'm speaking to you from New York City on this, the 30th day of March, 2021. And I do like to remind you that I'm the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. You can sign up for that by going to miningstocks.com. Call our office here in New York to sign up as well, 718-457-1426 during normal work hours. We also like to put in a plug for my friend Chen Lin. What is Chen buying? What is Chen selling? Especially if you have an interest in the biotech sector. And he has really come up with some very exciting stories, a couple of which I'm following in my own newsletter in the biotech sector. So what is Chen buying? What is Chen selling? And we also would like to put in a plug for Michael Oliver, especially when he's on our show. He is with us today. And we'll get to Michael in just a minute. It's olivermsa.com for his excellent work. We want to thank all of you for listening and making this show one of the more popular shows in the Voice America Business Channel. Also, encourage you to send along questions, whatever comments, questions you might have. Send them along to questionsfortaylor@gmail.com, questions and number 4, taylor@gmail.com. And we do want to thank our sponsors for making this show economically viable. This week's sponsors are Novo Resources, Sitka Gold Corp, El Oro Resources, Irving Resources, Hannon Metals, Fury Gold Mines, Great Bear Resources, Lion One Metals, SK Mining Corp., and Firefox Gold. I've titled today's show, President Biden's Next $3 Trillion Boondoggle. David Stockman, Michael Oliver, and Michael Timmons are guests in this week's show. Leave it up to the New York Times to remind us why prosperity is not just around the corner, and that's regardless of whether or not the force-feeding of $6 trillion of everything bailouts into the economy during the past 365 days causes the 2021 GDP stats to make up for the 2020 plunge brought on by the virus patrol, end of quote. That's a quote from David Stockman in his March 23 Stockman's Corner article discussing why the current exponential trend in government spending is leading the U.S. economy not to a more productive economy, but rather toward a cataclysmic end. And more importantly, I want to ask David what advice he may have for common folks given that view. And David will be with us in the second half of today's show. After our first commercial break, Michael Timmons, he's the president and CEO of Fury Gold Mines, will be with me to talk about some very solid news that was announced this morning surrounding that company's Eau Claire project. That's a gold project in Quebec. It is certainly an exciting story, and the Fury Gold Mines company has several projects that I think make this company, in my opinion, very undervalued. But right now, I'm really happy to tell you that Michael Oliver is with me once again to share his thoughts on key markets. And so thank you so much for joining us today, Michael. And of course, I'm sure on everybody's mind today, since, I don't know everybody, but a lot of people that listen to this show are certainly invested in gold, one way or another, either through the shares or through the bullion. And gold has just really not been able to rise at all, despite all of this massive monetary stimulus. What are your thoughts about gold, and what are your technicals telling you?
Well, our technicals are telling us that, and we've had this view for some months now, that gold is pretty much in link with T-bonds, or the popular ETF TLT, which is a long government bond ETF, in terms of their trend direction, their behavior up and down. In other words, as rates have risen over the last, especially since January, gold has dropped since the rally high in January, and coincident with the T-bonds, not quite as severely and straight down as the T-bonds have. Gold is more eroded. And to give you a number, just for example, gold doubled between late 2018 and the summer of 2020. Doubled, okay? And over the last 8 full months, from top daily close to today's low close, which, by the way, is not a new low in price for gold. Gold made a lower low earlier this month. It came close today. Was a 17.8% pullback. Took 8 months for gold to give up 17.8%. Now, I know when you look at a chart, especially if you're real close up and looking at dailies or weeklies, it looks very severe. But when you stand back and look at 2 or 3, 4 years of gold action, monthly bar chart, for example, we had a thunderbolt of an advance, the first bull leg. Okay, again, it doubled the price, and I don't think that's the end of it. And now it's taken 8 months to arm wrestle 17.8% pullback. Now, our analysis of the T-bonds and of gold argues that what's happened momentum-wise, not price, the price chart continues to look staircasingly lower, is that it looks like basing action. In fact, ever since November, even though we've lost price since November, it looks to us like basing action. And if we flip it upside down and look at the S&P 500, it looks like monthly momentum topping action. So I think April's going to be interesting, and I think it may surprise people who are now fearful of the gold drop, think T-bonds are going to continue to rise in yield, drop in price forever, and the S&P is going to go up forever. So I think those people are going to be shocked because I think there's going to be a turnaround. As for silver, which we still favor over gold, though lately it's been weaker than gold the last several days especially, it is still $2 above the lower price it's seen in the last 8 months, which, by the way, occurred several weeks after its high, whereas we got up to 29 plus in August. A couple of weeks later, you're down to 22, under 22. We're under 24 right now, just barely. So silver is really sort of in the upper part of the lower half of its range of the last 8 months, unlike gold, which is staircased lower. Silver's been in a box. Anyway, right now my thought is not, gee, should I get out? It's more, should I double my position in gold and silver related? And I'm in that. That's my bias right now. I'm looking for any excuse right now, and I think I'll get some as soon as we roll into April to initiate add to positions. So that's our thought.
Well, it's certainly the way it is. I mean, silver is always more volatile, and so when the bull markets are, when the precious metals are in an uptrend, silver usually outperforms gold, and then the downside, it usually goes down more than gold. So that's it's just the way it is, right? So I guess you have
more emotional.
And there's more emotional, and you have more chance if you have a good reading of the upside. So we'll be watching for your key, for your hints on which way you think markets are going. So we're in a basing phase right now. You think perhaps we could see a turn in April then, I guess, possibly.
Yes, evident on momentum indicators, not so much on the price. Price is always sort of delusional. It always looks terrible at a low, and it looks great at a high. Momentum usually gives you warnings about pending trend change. And right now, all of our stuff we see says be more looking for a bottom, don't be looking for further decline, certainly not sustained decline.
Well, I certainly, over the years that I've followed your work, that momentum indicator, you always show that momentum chart below the price chart, and that really has been very, very helpful in in convincing me not to panic out of gold a lot of times, or whatever the market is. Very, very helpful, Michael. I think that's one of the things it's really what makes your work stand out. What about the dollar then? The dollar is looking strong on the index, strong, quote unquote, on the index.
The dollar really it's impressed a lot of people, which is almost makes me chuckle, because right now it's 3.5% off of its low of early this year. Okay, 3.5% of groveling rally. Our intermediate timescale measures of the dollar suggest it's more of a short here than anything else. Also, you're in the lower quadrant of the last 6-year price range in the dollar. The lowest price the dollar saw since late 2014, dollar index I'm talking about, was just above 88 level. The highest it saw was 103.5, almost 104, back in 2017. Right now we're trading at 93. So we're three or so points, almost 4% off the low, but it's taken us all this many months to get up here. I don't think it's a sustained rally. I think it's just an interruptive upside correction in the dollar after last summer's very sharp drop in the dollar. So I don't trust that to sustain on the upside. And that's probably going to be one of the factors that helps gold here in this next quarter, is a rollover of that dollar rally.
Well, it would certainly seem like a very logical relationship there. So just a comment on Bitcoin, perhaps, Michael. I know that you track all of these things, and all kinds of markets that we don't talk about very often. Bitcoin, how does that look to you?
Well, it's still in positive trend via long-term metrics that we use, but it's built structure below it, meaning when you look at a momentum chart, there are levels you don't want to go back down to, and they're probably right now in the high 40,000s. We're in the high 50,000s, I think, right now. So it's very volatile. We know that. Meaning it's very enthusiastic. Which is not necessarily good. Also, our problem with Bitcoin is not that it's not ultimately viable as a means of exchange, but that governments are going to clamp down on it. And the reason they're going to have to is because to the extent that cryptocurrencies supplant the usage of fiat currencies, it undercuts central banks' ability to control money supply, have an impact on interest rates, etc., because this non-governmental money is out there competing with them. So we've heard phrases from Yellen accusing Bitcoin of criminal-type behavior, as if she's moved to regulate or prosecute it or something. And the same with Lagarde of the ECB. They both made statements that are very nasty about cryptocurrencies, which to me is a hint of future policy. So I think as Bitcoin gains in audience, it becomes more and more threatened by central banks and federal governments.
Yeah.
That's an issue that has not been debated, I don't think, much by the people buying Bitcoin.
Well, we are just about out of time, but I would just like to get a quick comment. Isn't that also true of gold, though?
Well, yeah, it is.
Greenspan talked about it. Yeah.
Yeah, remember Roosevelt, banned it domestically, and you had to turn your gold in and so forth. But you sit back and think about it a minute here. It's highly unlikely they'll get away with that. Gold is so pervasive now. So many people, even people who aren't free market oriented, they own gold. It's insurance for them. It's safety for them. If you try to take that away from them, there'll be a rebellion. You will have massive violation of the law if they try to. I don't think they'll do it. Attempt to do anything about banning gold.
Well, if anything, we might have to see a reassertion of gold as money in some form or another.
It wouldn't shock me that the Chinese take the lead on that, and maybe even the Russians, in terms of backing their currencies with gold, and then. The thought process will creep across the world at some point as the monetary crisis deepens and deepens.
Yeah, well, that's certainly an idea that Alistair McLeod has and has talked about on this show, and we shall see. It's certainly, but anyway, gold, silver, and a basing process, as are the T-bonds. So we'll watch, and maybe April we get a turnaround. And April is, I guess, it starts in about 2 days. So. All right, Michael. Well, thank you so much for your thoughts again. Always welcome. Always great to have you. Thank you so much for being with us.
Thank you, Jake.